Moving on, let's see some more transactions which are not regarded as a transfer. And in this case, we are talking about transfers between a holding company and its subsidiary. So there can be two cases here. Let's say you have two companies, we called it as H and S, and there are two cases which we are dealing here. The first thing is that the holding company should own 100%. Okay, of course there can be nominee shareholders for a one share or something. So transfer of a capital asset by a holding company to its subsidiary. So in this case, transfer of a capital asset. Please note that the asset which is transferred has to be a capital asset. So if what you are transferring is stock in trade, okay, or anything else which does not constitute a capital asset, then this exemption is not available, right? So transfer of a capital asset from the holding company to the subsidiary is not regarded as a transfer, but there are two conditions attached to this, which is what? The parent company or its nominees hold subsidiaries whole share capital. There has to be an apostrophe out here. This means that this holding company should own 100% of the subsidiary directly or through its nominees, right? So when you own the entire share capital, then basically, again, this is that same concept. If I pick something from one pocket and put it to the other, if I'm already owning 100% of this company, effectively it is under my control, right? So the transfer of a capital asset is not treated as transfer and therefore is not chargeable to capital gains tax. Similarly, transfer of a capital asset by the subsidiary company to holding. So this is just the reverse of the first one. Now subsidiary is transferring to the holding, right? But again, just like in the first one, again there are two conditions. Whole of the share capital of the subsidiary company is held by the holding company, and the holding company is an Indian company. In the first case, the subsidiary was supposed to be an Indian company. Now, if you notice this carefully, what it does is say, in first case it says, you should own the entire 100% share capital. Similarly, here also it says, the whole of the share capital of the subsidiary is owned by the holding company, right? So this condition is common. The second condition says that in this case, the subsidiary has to be an Indian company, right? But who's the subsidiary? The subsidiary is the transferee. In the second part, it says that the holding company should be an Indian company. Let's look at this. The holding company is an Indian company. But again, the common thread is that in this case, the holding company is the transferee. So what we can safely conclude is that in both these cases, right, the transferee has to be an Indian company, right? So because of this, the transferee has to be an Indian company. So in those cases, whenever there is a transfer of a capital asset, this condition of capital asset is equally applicable here also. If you are selling stock, this is not applicable. If you are selling capital asset, then this exemption is available, right? Both the above clauses are not applicable to transfer of capital assets as stock in trade, right? So even if it is a capital asset, within the definition of a capital asset, I would say, but if it is a stock in trade, then this exemption is not applicable.